Hello, traders, and welcome to the Friday Wrap-Up, Friday, February 6th, 2015. Traders, great to be with you after the New York close of Friday. This is brought to you through FXCL Excellence in Trading. Traders, great to be with you. It's a Saturday for me. It's still Friday for you if you're in the East Coast of the United States or wherever time zone you are. Please enjoy the video. If you would, let me introduce myself to you. My name is William Gilday, and I am your moderator for the Friday Wrap-Up, where we go over about 10 to 16 daily charts. Due to computer changes, we're only going to do about 10 charts today, and we'll get back up to our 16 and 15 next week. Traders, just about risk disclaimer. I don't have a slide for the risk disclaimer, but Forex trading has a large potential rewards, but also a large potential risk. You must be aware of this in order to trade in the Forex markets and therefore any other instrument that you might be trading. Traders, most of all, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading methodology is not indicative of future results. Meaning, if you're on a demo account and you decide to go to a real account, you're going to see a difference in your trading. Let me tell you a little bit about myself. I started trading in the year of 2006 and 2008. I retired from a great 27-year career in the fire rescue department and came to Thailand for a 3-month vacation. Well, traders, it's 2015 and I'm still in Thailand, so I guess I'm still on vacation. I do trade the Forex market every single trading day. Doesn't necessarily mean I take a trade every day, but I am in the markets. I'm listening, I'm learning, and that's what this is all about. Always learning for and looking for opportunities with high probabilities of taking profits. All right, traders, let's get started. We'll start off with our favorite, and that is our euro dollar. Look at this range now. We've been now in a range over a week. We've been in this range. Now, remember, these are daily charts. These are daily charts. And I will keep reminding you that we are looking at daily charts, okay? So if you look at this daily chart, you can see that we've been in this range. So these are some pips here. Each one of these candles are putting out some pips, 40, 35, 40, 50 pips. But we are in a range, so we're waiting for a breakout to see what happens. That big red candle on Friday tells me we might be continuing to the downside, which we would expect. Let's take a look at another pair. This is the Euro-Yen daily chart. Again, look at this. We're in a range, but again, this is the daily chart, so there's a lot of pips here. The only bias I would have towards this if I was trading, would I be looking to take this to the downside. I want to be taking the Euro-Yen to the downside. Myself, I trade the hourly charts. So I use the daily charts as my bias, and my bias is we're below this 200 exponential moving average, which is that green line. So I would be looking to take this absolutely to the downside. All right, let's take a look at the beast. Here's the pound yen. What a mess this was this week. Take a look at this. Higher highs and higher lows just kept on coming up there. Now it's stuck at resistance at Friday close. Again, this is a daily chart, and it's going to be interesting to see how we open up in our next Asia session, where we will see how this is going to react. And will this be profit taking? And can this come back down to the 200 exponential moving average? Traders, as long as this stays above that 200 exponential moving average, my bias is to the long side. However, I would be checking other time frames to make sure that everything is in line. I like at least 2 charts to be in line. So if I trade the 1-hour chart and it's above the 200, and then I look at the daily chart and it's above the 200, I'm pretty confident in my bias that I want to trade in that direction. Also, traders, if you're not trading live more than 6 months, please do not trade this pair. This pair is very volatile. It moves very, very rapidly, and it changes directions all the time. It's a very volatile pair. This pair can really beat you up. This is not a pair to be like training with the pound yen. They call it the beast. Okay, let's take a look at the pound dollar. Pound dollar's been pretty mellow, but it's been in this range. Glad to see it popped out of the range. We talked about that in the market the market opening preview, which I do every day before the London Open. We talked about this, how this had popped up, which is good. This means that this might be coming up. I was hoping to see on Friday another blue candle, which would be telling me that this is heading back towards the next resistance level or the 200 exponential moving average. That doesn't seem to be the case, and it looks like it's going to come back into the range. So we're going to be sideways, it looks like, at least on Monday, and possibly Tuesday. We'll see how that works out, and we'll take it from there, but not real uppity on that situation. So we'll just have to keep an eye on it. All right, let's take a look at the dollar yen. The dollar yen's a great chart, folks. If you don't have the dollar index chart, the dollar yen's a great chart to look at. This mimics the dollar index chart a lot, and you can see that the dollar index is basically stabled out. We're not going up, it's not going down. It's basically just staying where it's at. And look at how long this is a daily chart. Look at how long this has stayed in this range, and hasn't made a move. At some point, I'm expecting some move. It's either going to pop up and knock out that 121.35 area, or it's just going to dump and head back down towards that 200 exponential moving average. But we need to get past that 115. What is that? 59 area, somewhere down there. We'd have to get past that first. Let's take a look at the Aussie dollar. The Aussie dollar has been trading pretty well. It's still bearish. I don't even want to be selling the Aussie dollar. I would not want to be buying the Aussie dollar. So we'd want to be taking this to the downside on our lower time frames. The 200 exponential moving average on this chart, you can tell that there's really no effect on how we're going to handle this. So this is pretty simple, and all we just need to do is continue to sell the Aussie dollar. The Aussie is weak and the dollar is strong, and I think the Aussies are like 20 at 82. I'm sorry, 78, if I'm not mistaken, as of Friday. But we only want to be buying the dollar in this situation. Here's another great pair to trade, and that's the New Zealand dollar. But look at the last 5 days. Look at those indecision candles. The last 1, 2, 3, 4. The fifth one is not, but the sixth one is. All indecision candles. Doesn't know what it wants to do. And that's because the New Zealand's going to start to get strong and the dollar is strong. So they're fighting each other. And that's why you're seeing some dojis in there. And that's what we want to see, because we'd like to see this come back to the upside, wouldn't we? That'd be nice. We can trade this back up to the 200 exponential moving average. Remember, this is a daily chart. So this would bring us a lot of pips on a lower time frame on a daily basis. As I trade intraday, I don't hold my trades overnight. If it doesn't work out, I just take my hit and I get ready for the next day. I'm not one that holds trades for a long time. I'm truly an intraday trader. Yeah, I don't hold trades overnight. Of course, I don't get no sleep. Every hour I'm up, looking at my computer, which is pretty crazy. Here's another great pair to trade. This is the pound Aussie. Traders, this is a great pair to trade. This is taking out resistance. This is just on the up move. That's the best I can tell you. And, if you were trading this on lower time frames, you'd want to be taking this to the long side. If you're trading the daily chart, I haven't talked about that on any of these charts, but if you're trading the daily chart, what you do is just fib this, look for your pullback, and then just take this up. But this is a daily chart. So like I said, I trade the hourly chart, so I go to the hourly chart. I'm sure the hourly chart is bullish, and I just fib it and wait for my pullback so it comes back to my price and take the trade to the upside. Remember, traders, we don't want to be chasing price. We don't want to be chasing candles. We don't want to be chasing big blue candles or big red candles. We want to have price come to us. Another one of my favorites is the Euro Aussie, and this pair trades very well. However, it's been a little wacky the last couple of weeks, but this pair trades over 130 pips a day. So this is a nice pair to get into. You look at this daily chart. That's right. It was NFP on Friday. That's why we're getting these big candles at the end here. Yes, it was NFP on Friday. So now, when you go back to intraday charts, you're gonna have to do some analysis, realizing that this big candle is not a technical candle. This is a data candle, and this is from non-farm payrolls that came out on Friday. and 8 other pieces of data. So a lot of stuff came out on Friday in the New York session. All right, traders. Traders, I'd like to remind you that this is brought to you through FXCL, FXCL Excellence in Trading, our great friends. Traders, on behalf of myself, William Gilday, and again, our great friends, FXCL Excellence in Trading, I thank you for joining me for the Friday wrap-up, and I hope to see you on the next Asia session, where we will do the market opening preview every single trading day before the London Open. And we do 6 currency pairs every single day with analysis and commentary. We talk about data that's coming out, news that's coming out. So it gives a lot of information in about a 10 to 14 minute video. Traders, enjoy your break. And we will see you on Monday at the market opening preview before the London Open. Coming to you live from Pattaya, Thailand. Take care now, and bye-bye.